Let's take it across to Abizer Diwanji. He's founder Neostrat Advisors and one of the best voices on this space. And Abizer, the fact that there is a large investment made, arguably the largest in the NBFC space, doesn't come as a surprise because a lot of global institutions, particularly from the Japan side, have invested in Indian BFSI space in the last 12 months. But just the fact that that momentum continues, is that a big deal for Shriram and for the NBFC space in general?
So first of all, I think it's a big deal for the financial services space.
Exactly.
The fact that so much capital is coming into the country and there's faith in the financial services sector, no doubt. I think that the resilience of the regulator also is proven with this. Now, it started with RBL in a sense, because I would take SMBC as a secondary acquisition, primarily a secondary acquisition with some new money in. But if you look at RBL was a new money in completely. And the current Shriram deal is a new money in completely. So that is, I think, more of a confidence and more of a booster to these two entities in a way. And many more will follow, in my opinion. So we will see a lot of capital coming into India. I mean, just to take these two entities combined, and I agree with all your brokerages to say that, credit ratings will improve, ability to lend will improve, ability to grow, leverage will improve. But just step back and look at the numbers. And I will just come to where I believe one needs to really focus on. If you take both these acquisitions, we are looking at something like 70,000 crores of capital, new capital coming into the system. 70,000 crores. And 70,000 crores, theoretically, if deployed in lending, could result in a 4 lakh crore book, 400 lakh crore book. Now, that is a massive, massive number. And why do I say that? What is the total credit between banks and NBFCs today in the system? 200 lakh crores. So just these two transactions can actually triple the size of the market from where it is currently. Can you imagine? And if all of this is directed towards lending, my only risk is that if people continue to do what they were doing in their respective organizations, you will end up with a bubble in the consumable business, in the truck finance business, in the SME business, and in the microfinance business. So clearly, new avenues need to come up. Corporate India, which borrows, where the borrowings are increasing at a rate of 8% a year, need to actually go up by 20% a year, really, for this kind of capital to be deployed. So I think unless corporate credit picks up in a big way, and unless people like MUFG Shriram Finance or RBL now actually diversify into large corporate credits and corporate India starts borrowing, I think we may end up seeing a bubble.
May end up seeing a bubble. Okay, that's an interesting perspective to put it up. Good morning, Tamanna here. So two things I quickly want to ask. You've talked about Shriram in the context of what happened with RBL as well, which I think is the exact way to look at it. Does this open up or portend to more coming in now that the space is opening up and the interest is clearly high? That's the first part. And just if you can go back and elaborate a little bit on the math behind the figures that you talked about, where you're saying 70,000 crores of inflows, including which will lead to 400 lakh crores of loans out there.
Yes. So just let me explain this math and all that. But let me just first talk about, I think, yes, it's an increasing trend. I think it started with opening up the banking sector. And I don't think the NBFC sector was not open. The NBFC sector was always open. You could have 100% owned NBFC. We have Fullerton, which is owned by SMBC now. So I think 100% ownership in NBFC was always permitted. The confidence to put in money, a large amount of money into NBFC has now started. So I think it's more of a business confidence as far as the NBFC sector is concerned. As far as the banking sector is concerned, I think it's breakthrough. Because what we're trying to say is that now we can have chunks of foreign capital come and own businesses, control businesses, and control it to a level of perpetuity that is required of these strategic institutions. So I think that is the big change, and I think the regulator is far more open. Even if you look at all the changes the regulator has brought in, it's kind of blurred the lines between large NBFCs and banks. It doesn't matter. And if you look at it, I mean, what's an NBFC? NBFC is a bank without a deposit-taking capability. And if you look at it, if the central bank now focuses on providing levels of liquidity to NBFC sector, or at least the large NBFCs, then frankly, there will not be much of a difference between a bank and an NBFC. In fact, the bank will then have more obligations in terms of priority sector lending and other things, which NBFCs don't have. So I think the lines are blurring, and the lines will blur. I won't be surprised if ultimately large NBFCs fully owned will actually get banking licenses, or sorry, diversified owned will actually get banking licenses. Now coming to the math. Now, if you look at the math, 70,000 crores, I'm just taking a rate of 100, which is obviously not there, but so $7 billion or 70,000 crores of capital coming in. You simply multiply it by the 5 or 6. I mean, I would say 5 first. So 7 5s is 35. So 350,000 crores of credit ability that we are going to offer in the system. 350,000 crores of incremental capability. The market today is 200,000 crores, 200 lakh crores totally. But if that includes PSB, if you look at the NBFC market, it's 25 lakh crores. So a 25 lakh crore NBFC market, and let's just take MUFG as an example, MUFG Shriram as an example. Of the 40,000 crores that comes in, that 40,000 crores simply multiplied by 5 is 200,000 crores, 200 lakh crores. 40,000 crores is 2 lakh crores. 2 lakh crores is 10% of the current market. The ability to create bubbles is so significantly higher in these markets. Similarly, in the banking side, if you expect that 30,000 crores of RBL times 5 again actually moves into the SME or the microfinance sector, it will create a bubble there. So all I'm saying is that this capital is welcome, but this capital has to now be deployed in corporate India, which is growing at the rate of 8%, as compared to other credit, which is growing, including personal loans, which is growing at 15%. So I think there is a diversion and a new business strategy that both these entities will have to think through to be able to deploy the capital.
So, Abizer, it's going to be interesting to see, in terms of the kind of market that gets created. And when you're talking about foreign investors as well, who are coming in to buy a piece of the Indian financial institutions. So you spoke about RBL, we spoke about Shriram. You have IDFC First also, who received money from Warburg. You had Yes Bank, who saw Sumitomo come in. You had Federal Bank, who saw Blackstone come in as well. So 5-6 deals that have happened so far. What would that actually mean from an investor perspective when you have to look at the NBFC space? And with that line which is now thinning between NBFCs and banks, would you go in for NBFCs or banks at this point in time, with the FIs probably trying to make a comeback?
So I think there is going to be renewed and continued interest in the financial services sector. I think a lot of money will come through, but a lot of people will sit and wait to figure out where these people are going to be deploying the 70,000 crores that is now coming. So that's going to be important. And if sectors open up, so especially if industrial credit opens up in a big way, I think that will make a massive difference to the system. What we are also forgetting is there is another part of credit which we're not even considering. So apart from the 200 lakh crores that sits in the banking plus NBFC system, there is 120 lakh crores which sits in the private credit system. And that is through the AIF structure. That's also credit. That's also bank lending. That's also, corporate lending. So if you put all of this together, you will figure out that corporate credit is now moving towards more flexible credit. Banking and NBFC credit is kind of retail SME, MSME credit. Now, where would people come in? I would not go by legal entities. I would not go by bank or NBFC. But I would say, what is the business strategy? Because as I said, the lines are blurring between large NBFCs and banks. Let's focus on where the strategies lie. So if a strategy lies in saying that I'm going to diversify my book and manage my book in a particular way where the credit need is. So for example, private credit, if it's coming through an AIF route and it's a high yielding product, why can't that product actually be offered by the banks at similar yields or slightly lower yield? So if banks are getting innovative, banks stroke NBFCs get innovative in the way they are going to fund corporate credit, I think I'll go with that.
Okay. 70,000 crores, give or take, resulting in a 3.5 lakh crores of incremental book, NBFC space in focus. Abizer Diwanji, you understand this space very well, agreeing with what brokers are saying. By the way, he's not an analyst, so he's not giving target prices out there, but he understands the space so well that it's great to have this vote of confidence. Okay, Abizer. Lovely talking to you. And thank you so much for taking the time out and being with us today.